where you'll be looking at probably 2027, 2028, again the 10-year cycle. Abnormal profit comes with abnormal losses. What I always advise clients are not trade to make money, trade not to lose money. AI is faster than you. They take the opportunity faster than you. If you are focused on one or two products, the chances of you making money.
We are on the third and final episode of this collaboration together with Affin Hwang Investment Bank to dwell into the futures market and to get further understanding so that one day I become a better trader myself also. Today I have a very, very special guest. This guest of mine not only survived but thrived in some of the most volatile markets in recent history. Imagine being able to predict market crashes before they happen, right? And my guest today not only predicted that correctly once, but he did it twice. His name is Nandha. So welcome, Nandha.
Hey,
welcome
hi,
to the
hi,
show.
Frankie.
Hopefully today we can share more stories about how you did it, and then
Of course.
how we can see the market going to pan out going forward. Can you share with us your journey into trading?
I joined a company called Ace Commercial. This was in 1993. I went into the office building in Maybank. Then I saw a lot of monitors and charts and all that. Then there was an interview and it said you can make a lot of money.
Wow.
I was
As
a trader.
Account, okay,
as a
trader. Okay.
And that day itself, we had a half day training where they tell you where to buy, where to sell, just like that. And then the next day, we are off to work. At that time, that company traded in palm oil futures and the Chicago markets. My first commodities futures that I traded it's called Azuki Red Bean from Japan. Okay. And it's a sessional market. Every day you get 6 prices. So 8 o'clock, one price comes out. You look at it and you need to buy and sell before the price comes out. So it's a totally different futures market they have in Japan. From there, then I went up to Straits Securities Futures, the Maybank, Kananga. Now, for the last 20 years, I'm with Hwang DBS, and now it's called Affin Hwang.
During the early days of your career, 1993, that was the bull market in Malaysia, right? It went all the way up until 1997, and then we know what happened, right? So I went to do some background research on yourself, and then I learned that you actually predicted the crash before it happened. Correct. Do you remember that episode, and can you share that story with us?
Can. After my Ace Commercial, I was with this company called Multipurpose. Then I joined another company. Then Kuala Lumpur Option and Financial Futures Exchange was opened in 1996. Because earlier, license holders were under Kuala Lumpur Commodities Exchange. Then when Clough came in, then I applied to be licensed under Clough. Then I joined another company where they were focused on index futures, Kuala Lumpur Composite Index Futures.
FKLI.
So FKLI, correct. So 1997, it was a boom market. You see some of the second boards were trading at 20 ringgit, 15 ringgit.
Midas touch,
18
whatever
ringgit.
you touch can turn into
whatever
gold.
you touch, and there's too many horses' mouth everywhere. Hey, buy this, buy that, buy this, buy that. And then I looked at one indicator that I always use. I looked at the indicator at the price of 1278 on the KLCI. That indicator was saying the price is too high.
Okay.
So what I did was I told the owners of the securities company, I think you should sell everything that you have. They said, why? I said, market is going to 500 from this level. The head of trading guy, in that meeting, he actually literally screamed at me, are you mad? Now the price is 127 something, and you're saying it's going to 500. What's the PE, at 500? I said, no, I do not know anything about PE. Technical analysis saying it's going to go way down. He said, impossible. At that time, our local market gurus were saying 1,005, 1,006, 1,007.
Even today, we're not at 1,007.
Yeah, correct. Then market took a dip to 1,100. So immediately the owners called me in for a meeting. He said, why do you say this? I said, look at the pattern. This pattern and the 10-year cycle we work on indices. So I think you should sell your shares in this company and unload everything, open a futures account and short the composite index. So he said, okay. Then he did whatever that I said, everything.
Oh.
Of course, he made cool double-digit millions lah.
Wow.
But I never thought prices can go below 500. I said at least 500. So yeah, it went there. Then in 2008, similar patterns came in. So I looked at it, it's 10-year cycle again. Yeah, but it did not start from Malaysia. It started from US. So I took the opportunity to do it again. And of course, ganged up a few clients of ours. And
Okay. So
traded
this
on
time
this.
you didn't go to talk to the owners of
Oh,
the securities firm?
no.
So you were
no,
just
no.
doing it yourself?
He already
lah.
made money already. lah.
Okay.
Volatility is the word to describe the global markets in 2024. Heightened geopolitical tensions, climate change, and unexpected economic shifts have thrown the markets into a whirlwind, creating uncertainties that left many investors feeling uneasy. However, for seasoned investors, volatility isn't something to fear. It's an opportunity. Because whether there's volatility, there's potential for profit, especially in futures trading. I've mostly been investing in stocks, but with the potential I see in futures trading, I'm eager to dive in. The only thing that's holding me back is my limited knowledge. That's why I turned to Affin Hwang Investment Bank and CME Group, where I connected with industry experts who share invaluable insights. Jose taught me the skills needed to trade oil and gas futures. Elaine revealed her tricks for using a trading journal to learn from past mistakes when trading index futures. And then there's Nandha, the master trader who successfully navigated two major market crises in 1997 and 2008 when trading palm oil and soybean oil futures. Even Peter from Mr. Money TV got curious about futures trading and interviewed Kelvin Ho, the head of derivatives at Affin Hwang Investment Bank. If you're interested in getting started with futures trading like us, check the link in the description to open a trading account with Affin Hwang Investment Bank. By the way, I'll be joining Affin Hwang Investment Bank's event on the 25th of September 2024 at 6 o'clock in the evening, where I'll be moderating a panel with the experts that I've interviewed. We'll be discussing how the upcoming US election could impact the futures market. I know it's a weekday, but light dinner will be served, so don't miss out. Check out the link to sign up now.
Now you got me curious. What is this indicator?
Okay. I knew you're going to ask me the
Yeah,
question.
what is this indicator?
Okay, I use very, very simple
Right.
RSI and MACD.
Ah.
See, this is very traditional.
Oh, really? I use both as well.
If you look at what people are using right now, so many things. But I always believe in this. Be very familiar with very few indicators, and then you can see the movement very clearly because you're experienced in it. So when the pattern repeats again, you know what to do. Rather than looking for so many different kind of indicators. So I use RSI and MACD, and I use weekly to see trends. And I love if any divergences happen. So I trade on divergences. I like to trade on this kind of things. So is the market not supposed to be there? It's there. Then you take a position. This is what I do.
Okay. Just now you mentioned you look at weekly trend.
Yes.
Meaning to say you don't actually trade on a daily basis.
No,
But you actually
I
hold
don't.
a longer.
Yes,
a
if
longer
I'm
time
taking
frame.
a position, it'll
Okay.
be longer.
Okay.
But if you're talking about on a daily, of course I have the intradays also using RSI, MACD, and 15 minutes and 30 minutes. Yeah.
Right.
For intraday, you have a different strategy. For long term, you have different strategy. Because I'm with Affin Hwang, we handle refineries, plantations for CPO and also for soybean oil. That strategy will be different. Because for hedgers, all they want to do is insure against the physical
Correct.
holdings that they have. That will be different.
Right.
Now for traders, we have a different strategy. So there's different strategy for different kind of investors and traders.
You started off trading, you mentioned palm oil futures, right?
Yeah.
I'm sure in the 90s, there are not as many products to trade in the market. Today, we have products from CME, they have
Correct.
different like soybean oil,
Right.
gold futures and all that. With vast variety for you to choose from, what are the few things that you specialize in, or you just see opportunity and then just go into different assets?
There's two ways of looking at it. You can see opportunities everywhere, and then you can go and take some money. You can grab some opportunity here and there. But if you are focused on one or two products, the chances of you making money is much greater because you're very familiar with the depth of that particular product. And you will know the fundamentals and the technicals of the product. And if you look at it on a daily basis, then you know, it's been here before, and this is how it reacted, and this is what I'm going to do.
So what are the products that you look at
I look
every
at
day?
palm oil and soybean oil.
Palm oil and soybean oil.
These
Okay.
two things that bread and butter for us. Most of our clients are trading that, and I need to be a specialist in it so that I can advise them better. Yeah.
Palm oil predominantly planted in Indonesia, Malaysia.
Right.
Soybean oil, Brazil,
South America and US, yes.
Two different parts of the world. How do you learn about these two crops?
It doesn't take long. The technology that we have right now, in 1 year you can actually master it. You got to look at the fundamentals of palm oil. When is the peak production? When is the low production? When is the higher stocks? Lower stocks? What is the export numbers are? You got to look at government policies.
Could you share some of these numbers?
So say like peak production comes in from about March, April, all the way to about September.
This is the harvest season.
A peak production
peak
of
production.
palm oil.
Okay.
After that, then the production tapers off. Then you have the end stock going lower, somewhere from October all the way to about March. Normally, when the end stock goes down, then there'll be firmness in prices. Prices will be a bit more on the higher side. If the end stock is higher, then prices will be on the lower side. Now, when the end stocks are higher, you will see the nearby months. Futures is traded with on a month-to-month basis. So you will see the nearby month, which are called the spot months, will be trading lower than the forward months. And if the stocks are on the lower side and the demand is high, then you see the nearby trading at higher prices. This is the same for soybean oil. But soybean oil is being produced by South America, Brazil, Argentina, even China producers. So they have got different sow and reap seasons, and it's throughout the year. So then you got to look at who is producing, who has a higher stock, who has producing more, and then you look at price difference between South America and US. Then you can gauge. Now, soybean production is on a high side. That's why soybean oil is trading currently around palm oil prices.
That's the thing, right? Because there's always, they call it a discount of a premium between soybean oil and also CPO.
Correct.
And if I recall correctly, soybean oil always trades at a premium
Correct.
compared to CPO. So now they are
Around the same. In fact,
around the
if
same price.
on the futures December price, palm oil is trading $10 higher than soybean oil futures. So this is what we call a BOPO spread, bean oil palm oil spread. Bean oil minus palm oil spread is trading at -10. Normally does not last. In the last 20 years, I think palm oil has more expensive than soybean oil about 3 times.
Palm oil and soybean oil, they are seen as a close substitutes. So if you don't buy soybean oil, you can always change to palm oil. And then that's why traders and business and whatnot, they always compare these two prices and see which one is cheaper, and then they will go for each of them. One reason that I can think of why palm oil could be cheaper compared to soybean oil is also because of all this hoo-ha that's happening in Europe, where they say palm oil is not sustainable, you shouldn't consume palm oil, blah, blah, blah. So
it could be, yes. But this thing about Europe has been happening only lately, I think about 10 years ago.
Right.
So, but before that itself, soybean oil is always higher than palm. And the prices between soybean oil and palm oil, the true range is between $80 to $150. So that means palm will be always cheaper than soybean oil, about $80 to $150 per metric ton. That is where the market will be always. During pandemic, there were times where it was trading about $470 more expensive than palm, even though palm was on a high side. So just about a year ago, if I remember correctly, the price difference between palm oil and soybean oil was about $170. So now it's negative. Like I said, it won't stay there. Palm oil will become cheaper again.
Okay.
So we are basically waiting for either soybean oil to move up higher or palm to come down lower.
So have you taken position based on whatever we just discussed just now?
Yes, we are starting to take position.
Okay, right. So you are expecting the spread to go back to the usual trend.
even the difference of about 40 to 70, you still make money.
Okay. Can you walk us through one of your most challenging trades throughout your 20 over years of history?
Got plenty, but the most challenging one was during COVID.
During COVID?
Yes.
Oh, so just happened recently only?
Yes.
Okay. What was that
because
experience?
the volatility was very high.
But I thought traders love volatility.
Yeah, it's good for your business, but it's not good for clients.
Okay.
Yeah, so in Affin Hwang, what we do is it's not about business only. It's the sustainability of clients, and we always put clients' interest first. To us, prices of CPO and also soybean oil was very high. To actually advise clients, it was very difficult because the nearby months were trading at super high prices compared to the second and the third month, right? So when that happens, for hedging, it's going to be difficult because hedgers are normally, if you're looking at plantation, you are looking at sellers in the market. Refineries can be bought. So if you are looking at buying, prices are already very high. Would you dare to buy?
No.
Would you dare to even advise client? I think you can buy here. And the prices have just moved from 3,000, 4,000 to about 6,000, 5,000, 6,000. Would you ask your client to buy? You would not. Now, would you ask your client to short or to sell?
No, because the momentum is there.
Number one, the momentum is there. Now, most importantly, the spot month is trading 1,000 ringgit higher than your third month. Would you ask him to sell the third month at the discount to spot price?
Right.
You would not.
Right.
So it was very, very challenging for us at that time, and the volatility was huge. Of course, our business was very, very good. Big volumes were there.
Just now, you were mainly talking about trading for your clients, right? So, do you have any experience of, like, again, back to the question, the most challenging trades, but your own money?
Of course, I can't trade my own money.
Oh, you okay?
We are not allowed. As a license holder, we are not allowed to trade our own money.
So you trade on behalf of your clients.
We can advise our clients
okay.
when to take positions, where to buy, where to sell. Yes, because main reason is conflicts of interest.
I see.
Number two, if I have a position on my own, my advice to my clients will be
Buyers.
And if you're doing big number of contracts, then it's not going to be favorable to clients' positions. That's why we don't take positions on our own.
So let's say today I know you already, I know your trading style, I know you have successfully predicted the market crash twice and all that. I would like to appoint you to be my broker to do futures trading. Obviously, the first step is to open a Affin Hwang account. But do I get to choose and say, hey, I would like Nanda to be my trader and...
Of course.
Oh, can?
Of course you can.
Okay, I can do that.
Right.
Okay, but provided I need to know you lah.
Yes.
Okay, so today everybody knows Nanda already. So if you open a Affin Hwang account, look for this guy. Look for this guy. Same topic again. You have predicted the market correctly twice. Do you see any indication of such risks? I don't know, the time frame that you are looking at right now.
The recent drop was good for buying.
You're still talking about palm oil and soybean oil? Or are you talking about market in
overall.
general? Oh,
Market
overall.
in general, yes.
Okay.
Market in general. So
Okay.
the 2023, 2024, you won't see crashes happening in markets. I don't think so. Where you'll be looking at probably 2027, 2028, again the 10-year cycles.
Okay.
Right. So there will be some dips in 2023, 2024. 2025, some dips, and most dips are actually a buying opportunity in the market.
These are based on technical analysis?
These are based on technical analysis and pattern.
And patterns.
Yeah.
Do you look at fundamental analysis?
Of course, I look at fundamental analysis. Overall, that fundamental analysis, it's not that 10 years fundamental analysis. You have fundamental analysis nowadays probably lasts you for 6 months because things move very fast. Say we go into stocks, per se. You look at one particular stock, this year they're doing well, next year all of a sudden it's something else hidden in their accounts. You really do not know. So fundamentals change very fast. Same goes to government policies, change very fast, like interest rates, like what's happening right now. But the cycle of markets
becomes longer.
Yeah, longer. Things remain like every 10 years or 9 years, 10 years, things, the same pattern happens and again and again. So looking at that, normally years that end at 3 and 4, you will have some dips which are good for buying, and then markets will start riding from the 4th, 5th, 6th, 7th. Then that second leg is also coincides with probably Elliott waves. Yeah. Yeah. So
being in the market, we are always told that the economic runs on a 10-year cycle.
Yeah.
But the last round ran for 12, 14
Correct.
years. And then if it's not because of COVID-19 pandemic, I think it would have continued until today. That pandemic gave us a break, but it was a very, very short break. And then the market returned again. So technically speaking, my view is that the market never dropped at all. Right?
Yeah.
So if you extrapolate that trend, then we have already run for like 15, 16 years. So our theory is down the drain already, right? It is not a 10-year cycle anymore. So how do you see the market trend going forward? So is it going to be 20-year cycle going forward? And
it could. You can always take the 2020, the downside, as one of it.
as one of
As
the
one of
complete
it.
cycle?
Yes, you can
Okay.
complete. Because all you need is not a reason. The reason can come from anywhere, You see, the 1997 was Asian.
Right.
2007, 2008 was US. So this 2020, it can be related to COVID, it can be related to changes of environment. Yeah. So to me, that 2020 is done. That downside is already done. All you need
Okay.
is a big, huge trend change, and that happened. Of course, in 1 year, it moved up back again. So now you'll be probably looking at another one more, probably in 2027, 28. Because to see these changes, if you see the chart analysis, that happened. But after that, the market really, really moved up a lot. In my view, I think probably that thing has already happened.
Just now we mentioned about technology advancement making the market cycle shorter and shorter. I think these days there are also a lot of AI trading bots
Correct.
that people just buy and plug into their platform and then let it run by itself. Actually, what do you think about those AI bots?
When it first came, I hated it.
You hated it?
What happened was market became too fast, and markets became efficient. You don't get disparities. So when you don't get disparities, people like me, we make money from disparities. Remember, I said I love to make money on premiums and discounts. Right? So when you don't see that, then what will happen is AI is faster than you. They can see that and they take the opportunity faster than you. So at first, of course, I hated it, but then now I realize it gives market depth to the market. The volume is there
Okay.
for you to execute your own orders. With that speed that the AI has, of course, we see better volatility lah. And for us as traders, we like volatility. But I also need to caution that sometimes if a news comes out, so AI that is based on news, not on technicals, sometimes whether the news is correct or not correct, also the AI takes position.
Sometimes
So,
it's wrong position.
Yes, correct. Wrong position and moves the market. So the poor guy there, he gets just stopped out of no reason lah. The exchange also need to actually have good control over AI's programs to make sure they're actually not doing any manipulative action lah.
But with AI, I don't think you can do any manipulative action, right? Because everything is controlled by machine learning.
Yes, but things like put in price and take out price, put in price and take out price.
Okay.
Things like that
Right,
you know, which we can not supposed to do.
Right.
You can't do that. You see.
Just now you mentioned the word efficient market. Now we all learn from books that if the market is efficient,
Yeah.
you can only make normal profit. When the market is not so efficient, then that's where you
That's
make
you make-
abnormal profit, right? So if the market is so efficient and we can only make normal profit, then it will actually drive people away from participating in these markets. So I don't know lah. I think only time will tell how all this is going to pan out, right? For the whole industry.
Correct. You see, abnormal profit comes with abnormal losses. You see, as a trader, everybody always look at profits.
Right.
You got to look at abnormal losses also. Yeah,
Okay.
Because we are not trading stocks, you're trading futures. Futures, you're putting in margin. Margin is actually about 7 to 9% of the value of the contract. The 7 to 9% is nothing compared to the volatility of futures market.
So how do you do your risk management?
What I always advise clients who are trading, who wants to make money, you must always trade not to lose money. Not trade to make money, Trade not to lose money. Meaning that you will only go into the market when you are quite pretty sure it's quite safe to do so. How would you know that? When you want to take a position, say in soybean oil, and the price say is 37.80 right now, your indicators are saying let's buy. Now the prices have dropped from say 40 to 37.80. Now what I would do is I'll wait for price to drop more, even though the indicators are saying prices going to go up. When it comes to say 36,760 or 37.50, I'll buy so that I can put my stop lower. Now I'm buying at a discount. Chances of me losing money is lower than buying at 37.80. So I trade not to lose money. So my stop will be much lower since I'm buying at 37.50 or 37.40. If I don't make that trade and the prices goes up, it's okay. I didn't lose money. You must always trade not to lose money. So if you trade not to lose money, chances of you making money is higher. It is not about making the money, Always go into the market when chances of you losing money is low.
Just now you said your indicator already say that it's a signal to buy.
Yeah.
If you don't follow that signal, then wouldn't you be not disciplined on your strategy?
I'm going to follow that signal unless you're trading intraday indicators.
Okay.
Intraday indicators is different. The risk of you making money and losing money is small. But if you're looking at medium-term, long-term indicators, the risk of you losing money is higher because your stop will be bigger. It takes years for you to control your emotions, to make sure that you are actually buying or selling at a premium or discount. So you see, prices shouldn't be here. It's too high already. Don't enter a position. Wait for it to go up some more. A bit more. Then look at it. Look at the whole situation. Look at your fundamentals, your technicals, and look at it. Is it a point to sell? Yes. Let's wait a while more. So if it goes up, then you sell. Put a stop much higher than that. Then you are in a safer zone.
The nature of your job sounds very stressful. So for the audience who want to dwell deeper into trading, maybe you can share with us how you manage all the stress, the emotional stress, and then all these indicators, the noises in the market. Yeah, how do you deal with it on a daily basis so that we can look up to you and learn something from you?
Of course, in the beginning, when you have huge position, clients huge position and all that, you won't be able to sleep. After a few years, it takes probably about 10 or 15 years, then you become numb. Clients' profitability is something that we always take it very serious. So we read a lot. We have quite good contacts in many different countries who gives us a lot of information. So jumble up all the information and then look at the market and see again whether the market is at premium or discount.
So on FAQ Show, we also have a Telegram community group where I will share all this news every morning around 7 o'clock like that. I also come from investment banking background and I was also a trader. So I thought that since I already read all this news, might as well share with everybody. It was a fun experience speaking with you, Nandha. First time I'm sitting together with a veteran trader who predicted the market correctly twice. I hope one day when we talk again, you can tell me what is the next big thing that's going to happen. Then I become like your ex-boss.
Sure, thank you so much, Frankie.
Yeah.
Thank you,
Nice
thank
chatting
you
with you.
Invite.
All right. Thank you.
Thank you.